So Warner Brothers Discovery just got swallowed. $110 billion. Paramount Skydance is basically collecting Hollywood like it's trading cards.
Collecting is generous. More like two drowning companies grabbing each other for a life raft.
Oh, come on, that's a little harsh.
Is it? Look at the debt loads, Nate.
Okay, fair, but the scale here is genuinely historic. This reshapes everything.
It reshapes everything. Or it creates one massive target for another deal in 5 years. We've got the receipts either way. The rundown.
Okay, so Devon and Coterra. $58 billion. Shale behemoth is the phrase everyone's using, and honestly, I'm not mad at it.
It's accurate. You combine those two balance sheets and you've got one of the largest independent oil and gas operators in the country. The question I keep asking is, why now?
Because everyone's racing to lock in deals before the rate window moves again. We're hearing bankers privately compare this fee environment to 2021, and I believe it.
Of course you believe it. You love a boom narrative.
I love a correct narrative. Moving on, Nuveen buying Schroders for $13.5 billion. Asset management consolidation is just...
Relentless.
Relentless is the word. Scale or die. That's the whole story.
And Schroders is not a small name. That's a serious firm with serious European distribution. Nuveen just bought themselves a global footprint.
That's actually a smart deal. I'll say it.
Write it down, folks. Nate called something smart before noon.
Hapag-Lloyd and Zim, $4.2 billion. Maritime consolidation continues. Volatile trade routes. Red Sea drama still echoing.
Scale makes sense when your margins are getting squeezed by geopolitics. Fine. I buy that one.
Santander acquiring Webster Financial for $12.2 billion. Spanish bank wants American deposits. Classic cross-border push into U.S. retail.
And that one I'm watching very closely because US banking regulators are not going to rubber stamp a cross-border deal of that size. The approval timeline is the whole story.
Fair point. Now, and I saved the best for last, USA Rare Earth buying Texas Mineral Resources for approximately $73 million in an all-stock deal.
73 million? That's a rounding error compared to everything else we just read.
And yet it might be the most strategically loaded deal on this list. Full control of the Round Top Rare Earth project. Given what's happening with supply chain politics right now.
Oh, that one punches way above its weight class. Shareholder vote is coming, and I'd bet every LP in that deal is paying close attention.
Which actually brings us to the thing we have to talk about. Because there is one deal that makes all of these look like pocket change. The big one. Okay, $110 billion. I just need to say that number out loud because I don't think it's fully landed for people yet.
It hasn't landed for me, and I've been staring at the filing for 2 hours.
Paramount Skydance, which, let's remember, only just closed its own merger, turning around and swallowing Warner Brothers Discovery whole. That's audacious. That's actually insane.
The word I keep using is desperate, and I don't mean that as a pure insult. I mean, the economics are forcing everyone's hand here. Streaming losses, content costs that won't stop climbing, ad revenue fragmenting across 17 platforms nobody asked for.
Both companies bleeding subscribers to Netflix, bleeding ad dollars to YouTube, and just, running out of runway separately.
Together, they've got more runway. Whether they can actually land the plane is a different question.
Okay, but here's where I push back on the doom framing. Scale matters in content. It really does. You combine the IP libraries here, Warner's DC Universe, HBO, CNN, the whole Paramount catalog, Top Gun, MTV, whatever's left of Showtime.
The debt though, Nate.
I know about the debt.
Warner Brothers Discovery came into this already carrying a staggering load from the last merger. You're not fixing that by adding another merger on top. You're just building a bigger tower on a shaky foundation.
I'm not saying it's pretty. I'm saying it might be the least bad option available.
That's not exactly a ringing endorsement for $110 billion.
No, but it's an honest one. And look, insiders are already whispering that the combined entity could itself become an acquisition target within 5 years. A distressed media giant with incredible IP? That's basically ringing the dinner bell for someone.
Apple. It's always Apple in that conversation.
It's always Apple, or they've got the balance sheet, they've got the hardware ecosystem. They just need the content library that people actually grew up loving.
The executive bloodbath is going to be spectacular, by the way. 2 CEOs, 2 full C-suites, 2 everything. Somebody's getting a very generous severance package and a very long vacation.
Several somebodies. That's a lot of country club memberships getting activated simultaneously.
The real question I want answered, and we might not get this for months, is what the regulatory path looks like. This is a massive concentration in streaming, in news, in studio output.
And speaking of regulatory paths that are taking forever, we've got one more deal in the queue that deal lawyers have basically been living inside for months now. Google Wiz $32 billion, still not closed.
That's our next one. Voices. So the K-shaped market thing, I keep hearing this from everyone right now.
It's accurate, though. You've got Devon Coterra at $58 billion, this Hollywood mega merger at $110. Those numbers are pulling all the oxygen out of the room.
While mid-market is basically sitting in the corner eating lunch alone.
Exactly, and the bankers are loving it. Privately, they're comparing advisory revenues to the 2021 boom.
Which, okay, sure. But that framing conveniently ignores that January was the worst month for deal volume in over 4 years.
They'd very much like you to forget January.
They'd like January to not have happened at all.
Fair. Look, the fee narrative makes sense, though. If you're one of the shops advising on the Warner Paramount deal, you don't care that volume is sluggish. You're printing money.
Right, but that's my point. A handful of mega deals don't make a healthy market. They make a healthy Goldman quarter.
Okay, that's fair. I'll give you that.
Thank you. Now, the private equity angle is the one I actually find interesting. This great monetization framing. Firms held these companies through years of rate pain. LPs are furious, and now they're dumping everything at once.
Which adds a whole new wave of supply into a market that's already trying to figure out cross-border again after a brutal January.
So you've got desperate sellers, hungry strategics racing to close before rate windows shift, and regulators who are, let's be generous, unpredictable.
What could go wrong?
Speaking of unpredictable, Google and Wiz still isn't closed. $32 billion, announced months ago. Lawyers earning every single dollar of their retainer.
That one's tomorrow's problem, literally. Spill the tea.
Okay, so the Paramount Skydance Warner Brothers Discovery thing, can we just talk about the chaos inside those buildings right now?
Oh, it is absolute carnage in the best possible way.
Because you've got 2 executive teams, both of whom think they're surviving this merger, and statistically, they cannot both be right.
Someone is getting a very generous severance package and a lot of time to write a memoir.
And here's what I keep coming back to. The combined debt load on this thing is genuinely staggering. Insiders are already whispering that the new entity becomes an acquisition target itself within 5 years.
Which is, okay, that's either a really dark ending or a really exciting sequel, depending on your perspective.
It's a very Nate way to look at it.
I contain multitudes, but seriously, you merge 2 debt-heavy media companies, you don't automatically create a lean one. You create a bigger, more complicated problem with better IP.
That's actually a decent point. Okay, meanwhile, Google and Wiz, $32 billion, still not closed.
The deal lawyers are on a beach somewhere.
They are earning it, I promise you that.
Announced months ago, still dragging. At some point, you just want to see the finish line.
And then, zoom out, January deal volume hit its lowest monthly level in over 4 years, which is a brutal way to start a year that was supposed to be the big comeback.
Dealmakers are not putting January in the highlight reel.
No, they are not.
They're burying it deeply.
Speaking of things worth digging into, Google Wiz is still sitting in regulatory purgatory, and there are signals out of the DOJ that could move very fast. We'll have that next. Tomorrow's radar.
Okay, so tomorrow, Google, Wiz, $32 billion, still just sitting there.
Still pending. Still no signal from the DOJ or FTC. And every day that passes, the deal lawyers are basically printing money.
I actually feel fine about them getting paid on this one. That's a brutal regulatory environment to navigate.
The one I'm watching more closely, honestly, is the USA rare earth vote, a $73 million all-stock deal, tiny by comparison. but the geopolitical sensitivity here is enormous.
It's rare earths, the number doesn't matter. The supply chain story matters.
Exactly. Round Top project, domestic supply, the whole thing. Congress has opinions about this.
Strong opinions, loud ones.
And then Santander Webster is sitting in the regulatory queue too. Cross-border banking deal, $12.2 billion. US regulators are going to take their time.
3 pending deals, 3 different regulatory headaches, very soothing.
Speaking of headaches, we haven't even touched the Hollywood monster yet.